Good day, ladies and gentlemen. A warm welcome to another technical summary video presented by me, Letty Janse van Vuren. Our topic for today is the going concern frequently asked questions that was issued by the IAASB. It's a very handy document, and I think it's important that everybody needs to have a good working knowledge of the type of questions that were asked in this document. Let's go and have a look. Looking at the contents of today, we're going to look at why this is important, an introduction, contents of the entire publication, and then a quick overview and summary of the 6 frequently asked questions that relate to going concern. I'll then lead you towards some source documents with links, and I will then conclude. So a quick 15 minutes. Let's move on. The abbreviations that I'll be using today, the IAASB is the International Auditing and Assurance Standards Board. They're the ones that are responsible for the ISAs. FAQ, frequently asked questions. GC, going concern. MERGC stands for material uncertainty related to going concern. Key audit matters, CAM, EOM, emphasis of matter, and then ISA, International Standard of Auditing. Right. Why is this publication so important? Well, because we are accountants, auditors, and independent reviewers, we need to be aware of all publications that the professional bodies and standard setters are issuing. We can apply it in the performance of our duties, and going concern is greatly important to everybody. Your clients need to know about going concern, but this relates more to the going concern from a reporting perspective. So the going concern is a very important concept that is one of the fundamental underlying principles is that the financial statements have been prepared on the going concern basis. So management's assessment is very important. Your assessment of management's assessment is very important. So it's important to look at other documents that might give some clarity. So what happens is the IAASB then went and issued this new frequently asked questions document. And it says the topic is reporting going concern matters in the auditor's report. So it has no bearing on your clients whatsoever, just on you as an auditor. All right. The document was published to address some of the common questions related to going concern matters in the auditor's report. So specifically what this document focuses on is the interrelationship of MERGC and CAM sections. How does it work? If there's a material uncertainty, should you then also disclose it as a key audit matter? And if it's already in the key audit matter, should you then also discuss it in the emphasis of matter paragraphs? How does it work? How do you need to worry about that, the auditor's report, the detail in it? So the contents of the publication, it's 9 pages, so not a very long one. And there you can see a screenshot of the top of the document, just so that you can start recognizing it when you see it in your folders. It contains 6 questions and answers. Like I said, issued by the IAASB almost a year ago in August 2022, but still very much talk of the town. Developed by the Going Concern Task Force. They've got a separate task force. That's how important Going Concern is. So I'm now going to look at some of the most important aspects of Going Concern and of this publication. So the best way to do that is to look at the 6 frequently asked questions. I've listed them for you with a short little summary of what this is all about. What is the purpose of MERGC and CAM sections and EOM paragraphs in the auditor's report? So there's a table where they explain each and every one of these, right? And in this table, it says the CAM sections are there for the listed entities, because on the CAM sections, key audit matters, there's a separate section in the auditor's report that you need to worry about in terms of ISA 701. If you've got key audit matters, they need to be disclosed and discussed in detail to provide more information to the user of the financial statements. An emphasis of matter paragraph really is there to look at something that you just want to draw attention to. I think in practice, we use emphasis of matter paragraphs as an easy way out not to qualify. But a material uncertainty relating to going concern is very serious, because that's now where we're saying there's an issue with going concern, and it might not be appropriate to present the financial statements on this basis. Now we've got to go and look at, has this material uncertainty been properly disclosed in the financials or not? So each of those, that's what the purpose is of those sections. And the section relating to material uncertainty, if you do that, it's normally an except for opinion, right? So it is a qualified opinion, but it's an except for. So it basically looks at saying, right, except for this matter, where there's a material uncertainty, everything else is fine. So it also depends on your audit opinion depends on the severity of it. If there's a material uncertainty and it's been disclosed adequately in the financial statements, you can get away with an emphasis of matter, but you must draw the user's attention to that section. So you'll say, without qualifying our opinion, we draw your attention to note so and so or note so and so in the director's report, whereby, and then you explain the key audit matter as such, as part of the emphasis of matter. All right. So it depends. Do MERGEC, CAM, and EOM apply to all audits? So the answer is no. CAMs only apply to listed entities, like I've already told you, and material uncertainty relating to going concern and emphasis of matter, those apply to all audits. So if you've got a CAM section and it's a listed entity, you might not need to go further and discuss it as part of your emphasis of matter, all right? Because it's already in there, it's already emphasized as a key audit matter. Question number 3 looks at what are the implications for the auditor's opinion and the auditor's report of MERGEC, CAM, and EOM. Right, so let's look at it. All of those sections, the CAM sections, the emphasis of matter, even the material uncertainty, if it's been properly disclosed, if it's included in the auditor's report, they do not modify the auditor's opinion, nor do they represent separate audit opinions on the matters described in those paragraphs. So it's not like you're going to draw your own little conclusion on going concern. Your going concern, the material uncertainty relating to going concern, needs to be pulled through to your audit opinion. The emphasis of matter will relate to your audit opinion. And you'll say, without qualifying my opinion, I draw attention to the following. There once again is another table in the document that's very handy to use for this. Right. Question number 4 says, what is the interrelationship between MERGEC, CAM, and EOM? Okay. The most important thing, MERGEC must always be reported on if it exists. There's no two ways about it. It must be reported on. Emphasis of matter and CAMs cannot replace MERGEC. CAMs we only have if we have a listed company. An emphasis of matter we only have if we want to draw further attention to something else. So if you've got a material uncertainty, it should already have been disclosed in the auditor's report in enough detail. Right. You'll disclose it, and then normally just below that you'll say, except for the above, everything is fine in my opinion, blah, blah, blah. Or you can say emphasis of matter. Right. When there is no MERGEC, can going concern matters be communicated as a key audit matter in the auditor's report? So this is now where there's no material uncertainty, but there are still going concern issues. Can they be communicated as a CAM? And the answer is yes, but only if ISA 701 applies. And that means when there are CAMs to be reported. So when there's a listed entity, matters that relate to going concern could then be determined to be a key audit matter. Remember, this is up to the auditor's discretion, the whole explanation of key audit matters, and that's why I'm very thankful that this is not applicable to all audits and only to the listed. Because you've got to explain it in so much detail that you literally have to take almost everything that you've got documented on your working paper file ongoing concern and insert that as the going concern CAM. Right, what it says here is it says CAMs could include aspects of the identified events or conditions disclosed, like substantial operating losses or available borrowing facilities or possible debt refinancing or non-compliance with loan agreements, as well as the related mitigating factors. So if you've got a CAM, you can then go and say, well, there was an issue with going concern, but because there are mitigating factors, I'm not seeing this as a separate issue on the audit report. It is a key audit matter, yes, but I've done enough work to say that there are mitigating factors. If there's no MERGC, can going concern matters be reported as an emphasis of matter? And the simple answer is yes. If there's no material uncertainty, you can still draw attention to it. That's what the emphasis of matter paragraph is all about. Right. Other important issues that we have in here, the appendix to ISA 570 provides illustrative examples of the auditor's reports that relate to going concern. In illustration 1, it is an unmodified opinion, and the unmodified opinion is where there is a material uncertainty for a listed entity. The disclosure in the financial statements is adequate, and the CAMs have been communicated accordingly with in terms of ISA 701, which is the one that applies to listed entities and CAMs. If you have situations when events or conditions were identified that may cast significant doubt, so you've got a possible suspect, right? Got a possible suspect situation, but now there are management's plans, and you've looked at their plans to deal with those events. What are they doing to prevent this turning into a real going concern problem that threatens their ability to operate as a going concern? So if that has happened and management has dealt with it significantly well, and you've dealt with management's evaluation, you've evaluated their evaluation, and you then conclude that there's no material uncertainty. Those are then called close call situations. And the close call situations, the place for those is in an emphasis of matter paragraph. But also using emphasis of matter paragraphs too much can actually diminish the effectiveness of the communication about those matters. So widespread use of the emphasis of matter paragraphs, you can, if it's been adequately disclosed in the financial statements, I always prefer then referring to the director's report, because the director's report, if there was an issue that might have caused significant doubt, but they've dealt with it. They've got plans. They've looked at it. They've identified it. They saw this monster rearing its head and they said, we're not scared. That won't threaten our going concern ability because we've got this and this and this and this and this in place. All right. So that's very important. Things like technical insolvency. If they've got subordination of loan agreements, that will be disclosed in the notes to the actual financial statement with a loan. And you will then draw your attention of the users via an emphasis of matter paragraph to that. Okay. So very important there. Emphasis of matter paragraphs, very important. This decision tree is on page 6. Okay. And there are certain assumptions here. They say that there are, and this is for close call situations. So this is where there are issues that may cast significant doubt. And then it asks, are there any close call situations? Yes, there are. Is the entity listed? No. Does law require them to disclose CAMs? No. Okay. Is it fundamental to the user's understanding? Yes. Then you must have an emphasis of matter paragraph. And that's as simple as that. That's the route that we normally follow. So this little decision tree, worth its weight in gold. All right. The source documents that you can refer to is this document, the main publication, and then I've given you 3 links to other helpful documents by the IAASB as well. All right, looking at going back to the COVID-19 with those links there, the auditor reporting on going concern, all of it. All right. So more than welcome to go and have a look at that. In summary, remember that going concern assessment is crucial. It must be assessed by management. As auditor, you've got to evaluate management's assessment, and then you must assess whether the going concern principle or basis of preparation is appropriate. Going concern disclosures are important. Why? Because it provides more information to the user of the financial statements. The impact of going concern issues on the audit's opinion, you need to decide where it's going to be. Is it a qualification, like an except for paragraph? Is it just an emphasis of matter where you say, we refer to the above and without qualifying our opinion, blah, 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 we draw your attention to note so and so? Or is it an adverse, which means you're saying that the financial statements, the going concern assumption is not appropriate? So the impact of going concern issues has to be evaluated in terms of what the impact is on your audit opinion. So going concern and where it fits in the auditor's report is crucial. Remember, you can have it as a CAM, or you've got a merge EC, or you've got your emphasis of matter. All right. And I think that as auditors, we always, how do they say, err on the side of caution. So because we go with being more cautious, we prefer disclosing it as an emphasis of matter paragraph. All right. Any questions from your side? If you feel you still need more detail, we've got my slide here with the technical alerts that are published by the YouTube channel, all the technical summary videos. There are lots more like this one, little 15-minute topics, webinars on demand where there's now like a full 2-hour webinar, and then my baby, the MCLU subscription, right? The monthly compliance and legislation updates. So please make sure that you are okay with accessing this database of knowledge. Yeah, but that's it from my side. I trust you enjoyed this video on the going concern frequently asked questions. Thank you, ladies and gentlemen, and goodbye.